morning. Wanted to catch everybody up with a quick market minute. Here we are right before Christmas, and 2023 has been an interesting year. All the expectations that we had coming into the year to see the economy slow down, to see a recessionary type of event take place, really never came to fruition. Instead, we've seen the market continue to grow this year. You know, in July we hit a new peak and then we sold off in August, September, and October, only to have the market start to rebound in November. And the market's been on a tear since then. The most recent Fed meeting, the Fed has decided to hold rates steady and have hinted to the fact that they plan to cut rates 3 times in 2024 for a total of 3/4 of a point. So that would put the Fed fund rate somewhere around 4.5% off of its highs. We've seen the 10-year Treasury retreat off 4% and the market continue to push upward. But does that mean that we're out of the woods? Well, not necessarily. Remember, rates are still high right now, and the Fed is still taking a hawkish stance, which means that we still have headwinds at the market and the economy. Despite good GDP numbers that we just saw from the economy, and despite some of the jobs numbers that we're seeing, the economy is still slowing down. So remember that. There's opportunities out there, and lots of opportunities right now. So we're going to continue to take advantage of those, especially going into the next year. But I would expect 2024 to carry some volatility with it. We have a presidential election, and we have other things that are happening in the marketplace and the economy that I think are going to put a little bit of more headwinds and create some more volatility for us. The current data from the Institute for Supply Management on manufacturing PMI suggests that manufacturing is in a contraction right now and starting to slow down. So we're going to continue to watch those things. Does this mean that we're not going to have a recession? We don't know. But it looks like, as of right now, the economy is holding strong and inflation is coming down as well. So that's likely going to push the market up higher. But in 2024, we'll have a lot of volatility around the election. It's going to be a year of emotions. So be prepared for it. It doesn't mean that we need to make big changes or try to make big liquidations. Instead, what we're going to do is look for opportunities that they present themselves. Going back to 1964 till now, we've really only had 2 years in a presidential election that were negative years. In fact, the average return in a presidential election year is over 8%. So we'll expect to see something along those lines. But despite all the good information that's out there and the good news around the market and the good returns that we're seeing here coming into the end of the year, that doesn't mean that we're necessarily out of the woods. I would expect 2024 to carry a decent amount of volatility with it. But remember, volatility works in our favor. It creates opportunities. Some of the concerns that I have going into 2024 have to do with manufacturing starting to be in a contractionary state. So we'll keep an eye on that. We'll see what happens with the overall economy. Right now, the economy looks pretty decent, and we'll expect the market to continue to grow from here, especially if the Fed does cut rates. But nothing is for certain, and so we'll look for those opportunities as they present themselves, and we'll also look for ways to protect what we've already earned. In the meantime, I want to wish everybody a Merry Christmas, and I thank you for trusting us throughout this time period, throughout this year, and we look forward to what 2024 holds for us. Have a great day.